Hey everyone, it's time for another episode of Mayhem in the Markets, brought to you by Traderade.com. This is being made on Saturday, November 5th. We're going to talk a little bit more about what I'm seeing in the markets and why it is interesting. These are the charts that really went far on Twitter. I'm going to keep this kind of brief. I want to be respectful of everyone's time, but I also want to get into the things that I think are worth watching. So first we have the U.S. personal savings rate near a historical bottom. We can see in this chart in the blue that the savings rate is now 3.1%. We could see the red line showing credit card loans at $926.2 billion. So both of these are going in the wrong direction for the health of consumers, who over two-thirds of which are living paycheck to paycheck in the United States. We consistently hear the myth of the strong consumer, but the reality is this says that the consumer is probably not doing that well. It doesn't mean that we're at imminent risk of some sort of depression or, economic calamity, but it does mean that the recession we're likely to face will be a little worse because a lot of folks aren't doing so well. The credit card debt that we're seeing surge, a good chunk of that seems to be related to inflationary pressures that families are facing as cost of living surges in this country. People are both plundering their savings and leveraging up on debt that is revolving rate debt, which means that it gets more expensive and more expensive. And I think that's a bit of a concern, because if people don't have savings, if they're leveraging up, if rates are going up, and then we're going to see some pressure in the labor market, that could make for some trouble, especially in those debt markets. That revolving debt could become more vulnerable, or credit cards could see higher delinquency rates during that type of a situation. So something to pay attention to as a risk factor for some of those banks and credit card companies specifically, but also the consumer, who makes up two-thirds of U.S. GDP. We also see weakness from the consumer in pending home sales that are collapsing below COVID lows. This is the biggest drop in sales over nearly a decade, and it is likely to negatively impact both home builders and real estate prices. So I think that's something that's worth paying attention to. Rates have surged to 7%, the highest since 2002. So we're now back 20 years earlier in mortgage rates, completely moving past the entire period of the great financial crisis, the recovery from it, where rates were made artificially low, even going back before the great financial crisis when, the Fed was hiking. We're seeing rates from the prior cycle. This is a pretty incredible change in terms of the rate of change in rates as well. That velocity is the fastest rate of change for the mortgage, from going from lower than 2.5% or so to 7%. That rate of change made it very, very difficult for home prices to adjust, which remain far too high. So this drop in pending sales reflects that. People are not willing to buy at these prices, not only because of inflation, but because of rising rates making expensive homes unaffordable. We can see shipping costs are collapsing between China and the U.S., particularly Shanghai to L.A., as we can see on this chart. That has made almost a full round trip from pre-COVID to where we are now, which is exactly what you want to see, as we're having some evidence here that there's cause to be a little bit relieved from the sort of supply chain driven inflation that we're seeing from China, at least insofar as shipping is concerned. And then we've got copper from abundance to scarcity. This is a really interesting one, because what it's showing us on this chart is that we don't have a lot of inventory left. A lack of production and exploration has left us vulnerable to a situation where, if there is ever a surge of demand for copper, we might not have enough. And of course, we're trying to build this renewable world with a lot of solar and wind, with EV cars and all this sort of other stuff. And I was just a little bit concerned to see just how low these inventories are, because we just don't have enough. And then when you start to talk about what does the world look like if we begin to try to build cities anywhere again in the next business cycle, we begin to get more into renewables and have more EVs being built and sold, we're going to have a problem with copper. So it's not a story of today, but it is a story of the future that we should pay attention to. And that concludes my presentation. I want to thank everyone for tuning in. If you'd like to get $20 off your first month of Discord access with Traderade Plus, you can use the code YouTubeSale. That's YouTube sale at Traderade.com, checking out the Traderade Plus monthly plan. Thanks for listening. If you like the content, like and subscribe, and consider following us on Twitter using the handle Traderade Tweets.